So we'll see if we can put together two back-to-back days. Haven't done that since early February. Boeing is the real driver here. We are talking about 150, 160 points in the Dow. Boeing, huge move up. All the airlines, we're seeing double-digit gains here in some of these airlines today. So the bill is real, and the markets are responding to that. In terms of sectors, 2 to 4% gains in the most beaten-up ones. These are the energy sectors, industrials, banks, retail. These are all the sectors that got the most beaten up in the last month here. A number of companies are continuing to withdraw guidance. Not as many as you would think, but we've seen overnight. We saw Whirlpool, we saw Target withdraw guidance. Twitter did that yesterday, joining. We're keeping the list of the 16, 17, 18 companies. MasterCard did it a little while ago. Deere, TripAdvisor, FedEx, Best Buy, Carnival, Darden, Marriott. It seems like a long list, but when you consider the S&P 500, actually a fairly small number have withdrawn their guidance or refused to give in guidance. This is going to change, folks. In the next couple of weeks, you're going to see a raft of companies come out and either give very conservative down guidance for the second quarter, or they're going to withdraw guidance for the full year altogether. I think that's going to be a big issue. And that's one of the reasons, of course, the market keeps gyrating. Even overnight, the S&P gyrated in a 100-point range, 1,000 points in the Dow, indicating that still everybody's fairly clueless about how to price the earnings. Overseas here, modest gains in the stock 600. At least there was a few minutes ago here. Hang Seng over in China, a 2-day rally that they've had here. That's kind of significant. The biggest one, though, the Nikkei. Look at this here. That's at 8%. Nikkei's up 20% in the last 3 days. That's a huge, huge rally there. That's the big global market that's had the biggest move. I still just want to point out, about 3 weeks ago, I pointed out that this is a global takedown, that the markets were down right across the board. It's really rather remarkable. This is still the case. The S&P 500, 28%. This was before the open, but 28% from the 52-week highs. Europe, 29%. That's the stock 600. Emerging markets, 29%. Japan's only 20%, but a day ago, it was also 29%. It's had a huge rally in the last 48 hours, as I mentioned. So you see that remarkable, the entire global market is still pretty much down the same. Even here in the United States, if you look at various ways you slice and dice sectors from various ways, like growth is down 25%, value's down 30%. Okay, that's a difference. But when you're talking about numbers this high, it's still pretty darn close. Momentum strategies that buy stuff that's been working in the last 6 months, that's down 27%. How about low volatility stuff that's not supposed to move that much compared to the overall markets? When it moves, well, that's down 30%. So you get the point here. Even with all these gyrations in the last few weeks, even with the bill, even with the Federal Reserve acting, the overall market is still moving remarkably in tandem. The one exception I would make here is the Russell 2000, which is definitely acting a lot worse than the overall market, indicating it's the small cap stocks that are still very much under pressure. Guys, back to you.
Yeah, and that has been an underperformer throughout, even when things were a lot better. Bob, thank you.